Splendid evening it is to you viewers. Welcome to Special Focus right here on Equity Access, your area of perspective on stock market developments and on developments in the Zimbabwean economy. Ibn Mabunda signing in. Let's go. On Special Focus tonight, TSL, a listed company on the Zimbabwe Stock Exchange with investments in agriculture, real estate, logistics and car rentals, today released its financial results for the year ended 31 October 2018. Revenue was up 19%, driven by significant tobacco output in the economy in 2018. Of note is the fact that TSL holds a 60% market share in tobacco auctioneering in the country, bringing into consideration the fact that in 2018, tobacco earned Zimbabwe just below $1 billion. So that should have obviously contributed to their positive performance. They also did record 167% growth in their profit after tax. Of note is a caveat given by the group chair right at the beginning of the analyst briefing held today in the capital, to the effect that there is reporting currency issues that need to be factored in while looking at the financials as macroeconomic conditions continue to rage in the economy. Well, I then had a chat with the chief executive, Patrick Devenish. Let's have a listen.
You know, we get a lot of tobacco going through our auction floors, through our logistics businesses, and through Agricura, which supplies inputs, and Propac. So the tobacco crop is a big driver of our business at the moment. Well, the season so far has been very good.
Okay.
As you know, we had a mid-December drought instead of a mid-January drought. The rains in January were very good, so it's going to depend on what happens in February and March. So far, it's been a very good season.
Okay.
So the El Nino has not yet materialized, and we hope it doesn't. But we are focusing very hard on our manufacturing side at Agricura, and very importantly on our relationship with what is now called Corteva. So the Dow DuPont partnership, their crop protection business is now called Corteva. They are a shareholder in Agricura, so we have access to their molecules, their new products, their marketing, etc., etc. So we will be working very closely in launching their products, not just us, but we will have a lot to do with moving their products into the market, and they've got a lot of products that we didn't have access to in the past.
Going forward, the group launched a new strategy codenamed Move Agriculture, which runs until 2023. Under Move Agriculture, the group seeks to strengthen their stakes in agriculture by way of focusing more on processing and packaging a more diverse range of agricultural products. Elsewhere, George Charamba, presidential spokesperson, confirms reports of diamond deposits in Masvingo and Chihota. This is said in an interview this afternoon. While Zimbabwe Consolidated Diamond Company intends to carry out mineral explorations in Chihota communal lands in Marandra district, a development that requires an environmental impact assessment to be carried out. The ZCDC CEO, Dr. Maurice Mpofu, is on record saying by 2022, the company would have invested $400 million to ramp up diamond production to 10 million carats annually in various mining projects under its purview. Also, on behalf of the president, a 24-member presidential advisory committee is named. For conversation on these and other issues, I'm joined in studio by our resident analyst, Anesu Chimbumo. Anesu, good evening and welcome to the platform.
Thank you, Eben. Thank you for having me.
Beautiful. Quite a positive performance there by TSL.
Agreed.
Profit after tax, 167% growth, as well as growth in revenue of 16%.
Yes.
What is the significance of that given the macroeconomic conditions that TSL has had to operate in?
Well, they enjoyed mostly coming from a very good tobacco season, which recorded just under $1 billion in terms of their revenue, and which is pretty much huge ever since the millennium began, 2001. We also see that the prices were a little bit more fair in terms of the tobacco, so their tobacco sales floor business really did push in some good numbers for their revenues. And then also
hold on a second.
Thing, yes.
The prices actually slumped from $2.96 in 2017 to $2.92 in this particular year. So could it be perhaps
Well, that offset was pretty much taken away by the 30% increase in volume and values in
Okay.
terms of the tobacco sales. But then this is why I just say it was a little bit fair. It wasn't so much of a knock on them. It was a fair decrease, especially considering that quality of the tobacco leaves were not up to par as compared to the previous year. But also adding on to how the tobacco season came into effect, we saw a lot of quasi fiscal engagement from the government, bringing in the whole command agriculture aspect of things, which really pushed a lot of volumes and a lot of farmers got into the game. And then also another business that I noted was their properties,
Okay.
where they had about 100% occupancy in terms of their properties. So with those two really kicking in, that's a good number for them to have a 19% uptick in their revenues.
Correct. You did mention the properties business. Of right at the core of that business would be the Vostermans project.
Yes.
In 2018, they were able to establish 3 facilities,
Yes.
and they should have gotten that to 5, but 2
Yes.
remained outstanding. And in my chat with the group CE, he said they're quite optimistic that they should be able to complete those 2 facilities in 2019. But given what we have in the economy, do you think that that will be viable?
Well, actually, just to give you a little bit more light, the 5 were actually supposed to be completed in 2018, but then the last quarter of the year actually then got them to a place where they decided to hold back on the other 2 warehouses that they wanted to build. So just with that in mind, you'd see that the macroeconomic issues that are in the country are not really favorable for them to continue that project. In that regard, they need to have a little bit more direction and sense in terms of where we are going as a country.
Okay. Going forward, the group is launching Move Agriculture in Transapatum 2023,
Yes.
where they intend to actually diversify in terms of their packaging. At the moment, they package tobacco products,
yes.
but they want to expand into maize and a whole lot of
Yes,
products.
yes.
Do you think that is a good initiative?
Well, it is a good initiative, riding on the fact that a lot of people are getting into farming, which should show us some good supply numbers. But then we have other constraining things that can come against them, which are your seasons. Your seasons are changing at the moment because of a whole lot of global warming and the like. So you'll find that we have a lot of somewhat of a drought in the country. It is more dry than it was back in the earlier years of the millennium, but then it's something that can really constrain them in terms of their packaging business. But then it's something viable for them to go into, because I do understand other products that they would be wanting to package are rice, and that product isn't much and that product isn't much really produced in the country. So that would also depend on the imports side of things and how much of the constraints are there on the importation of rice and other products like that.
Okay. Moving on, we had the Marange diamond discovery, number 2010, 2011, thereabout.
Yes.
And now presidential spokesperson Joy Charamba says that there are actually diamond deposits in Mashingo as well as Chiwota. Is this a second chance to Zimbabwe, or here we go again?
Here we go again. It sounds like a crude statement coming from someone who's had very flip-floppy statements. But then it could be a very good positive chance for the country again to actually get into that space again. I mean, they are expecting about 10 million carats from the deposits. And if we do get to a place where we do not just mine it as raw as it is and then sell it off in the raw form that it is, it could still give us some good numbers. Because most of what happened in Marange, we could have benefited a lot, but then we were pretty much doing the raw unrefined diamonds down in Marange. So that was not very much of a good thing for us. I mean, we do go through a lot of these. We do go through the same problem in most of our minerals, because we don't have a lot of refineries or companies that actually get into that. Because I mean, refining is a very, very expensive thing. Electricity is needed and the like. And with a country that has got pretty much high electrical costs in terms of for industrial use, it's a very tough thing for them to get into. But then something that we could look at.
Again, pointing back to Marange, do you think now we have a framework that actually allows us to make the most out of the resources that we have? Because I think we lacked that when we had the whole Marange situation at the very beginning.
Not to shortchange you much, but then I think the framework hasn't really changed as much from the previous
So
years.
we are back to 2011, 2012.
I don't understand.
I'm going to get me a pick of the shovel, make my way to Marange, to Chiota this time around.
Well, it's not going to be that simple, because back then people quickly, before the government really then started to put in some frameworks in terms of protecting their minerals, they had not pretty much come up with that framework. But then with that framework being there ever since that time, it may not be that simple for you, I think.
I'm not convinced. ZCDC CEO Dr. Maurice Mpofu is on record saying that by 2022, the company would have invested $400 million to ramp up diamond production to 10 million carats.
Okay.
Do you think that's possible by 2022?
Well, for the company as an individual, I don't know. I really don't know whether it's going to be very plausible for them to reach that much, especially with how we are not very sure about where the economy is going to be going and taking which direction currently. But then, as a collective in the industry, it could be possible, because we do have investors coming in from outside the country, the likes of Vast and Alrosa. So it's something that could be achievable.
Okay. Moving on. On behalf of the president, a statement is issued that a 24-member presidential advisory committee has been set up. This is across the board, touching on the economy, health, agriculture, as well as ICT. There's some familiar business persons there to mention: Shingu Munyeza, Busisa Moyo, Simon Hammond, Kudakwashe Tagwirei, Joe Mutizwa, Natalie Jabangwe, the list being interminable. Your thoughts?
I'll keep my thoughts for now, just to see how the board is going to, the 24-member council is gonna work out the differences between the government and the business side of the country, because we have seen some symptoms and signs of state capture in terms of how things are conducted when it comes to clear-cut decision making, and whether to actually go the simpler government way.
It's a brilliant move to involve members of the private sector.
Yeah, it is. But then I really wonder who is going to be really looking out for the pauper.
Oh, you don't sound so solid as to the course that this one is going to take. Let's have a quick look at the stock market and see how stocks did perform today on the Zimbabwe Stock Exchange. Anesu, please take us through.
Okay, the stock market was pretty much on the positive today. Both the All-Share Index and Industrial coming up 0.43%.
Okay.
For them to settle at 158.09 and 527.77 points, respectively. As we did mention earlier on in the week, stocks that are pretty much way ahead in terms of their year-to-date are those that have some international relation to do with themselves, except for Delta. Delta has recently had a price hike that also pushed their price up for it to be 16.5% ahead of its year opening price. You do see that Padenga, which was the highest performing counter in the beginning of the week, and still is the highest performing in terms of a year-to-date basis, 23.53% ahead of its year opener, did come off 0.32%. I think probably that's much to do with it overheating, because these price levels of about 105 cents are pretty rare for the counter. But then, like we did mention on Monday, that has much to do with it being a largely an exporting company selling its product to Europe and America. Best performing count was Media House Zim Papers that came up 20% for it to settle at 5.88 cents. But the worst performing was Star Africa that dropped 9.23% on its previous price to settle at 1.18 cents. With Old Mutual, like I had mentioned earlier on, that it has an international relation, it was also primarily listed on the JSE, so is PPC. So we do see that their fungibility is around about 443% and 353%, which is pretty much close if we then net the two numbers out to our parallel market exchange rate of the US and the bond. That's pretty much it from me and the stock market today.
And that's it for the show. Thank you, Anesu. Thank you, viewers, for watching. Don't forget to like, subscribe, follow us on Twitter, Facebook, and visit our website, www.equityaccess.net. From Anes and I, thank you and good evening.